Hello students, I Pallav Davari welcome you all in my Pallav Davari classes. In this video, we will discuss India's foreign trade policies and the small scale sectors. The topic which we will discuss in the foreign trade and the small scale sectors are features of the India's foreign trade, change in the trade pattern during planning, problems in India's foreign trade, meaning of small scale industries, classification of small scale industries as per MSME Act 2006, role of small scale industries in India, government assistance to small scale sector, and problems of small business. We will discuss all these points in detail. Let us start with India's foreign trade policy 1950 till 1990. To review the foreign trade sector, the emphasis was laid on the trade policies of the planning process. Listen, from the first 5-year plan till 1990, India followed the closed economic model. Under the closed economic model, our government emphasized on certain policies. Let us see what are those policies. The first one was import substitution policy. Second was export promotion policy. And the last one was liberalization policy. Let us discuss these policies in detail. The first one was import substitution policy. It implies discharging the import of those goods that could be produced domestically. Listen, we have seen that in order to increase the pace of industrialization, it is being decided that India will stop importing the goods which they can domestically produce. What was the reason behind it? The reason was, first, industrialization will increase. Second, we are in the position to save foreign exchange reserve. And the last one is India will become self-dependent. What was the reason behind the import substitution policy? Let us see. The first one is ensured domestic industries from facing stiff competition from foreign industries. Listen, through the import substitution policy, it is being decided that the government will provide protection from the foreign industries to domestic industries. Second provision which we made under it is that the domestic industries should be protected so that they will grow and expand. Third one is through the import substitution policy, the motive of the government is to save foreign exchange, because our country need foreign exchange for the development and for the expansion and for to make the country good and prosperous. The next reason for the import substitution was provide enough space to initiate industrialization process in the country. We want that the industrialization should increase at a high rate in the country. The next one, we simply want that our country should become self-sufficient and self-reliance. Therefore, we followed the import substitution policy to reduce foreign dependence. The next policy was export promotion policy. In the way of making India a self-reliant economy and following the policy of import substitution, it was realized that India was running short of foreign exchange reserve. With a fall in the foreign exchange reserves, it becomes difficult to import goods that are necessary for the development of the country. So the government followed the policies through which, in the way of making India a self-reliant economy and following a policy of import substitution, it was realized that India is running short of foreign exchange reserves. With a fall in the foreign exchange reserves, it becomes difficult to import even the goods that are necessary for the development of the country. Thus, in order to earn the additional balance of foreign exchange, the policy of export promotion was initiated. The next one was liberalization of imports. The government decided to follow the steps through which the import and the export procedure becomes simple. Why we want that the import procedure should be simple? So that we are in the position to import capital goods which is needed for the development of domestic industries. Let us discuss the next thing, that is change in the pattern during the planning. With the initiation of planning in India, there was a commendable change in the pattern of trade. When I say commendable change in the pattern of the trade, what it means? It means that in the initial phase of planning, volume of the trade increased, export increased by 52 times. In the year 1950 it was 606 crore and it increased to 32550 approximately in 1950 till 1991. The import also witnessed the same increment, that is import increased by 70 times. Composition of the trade has completely changed. Composition of trade consists of type of goods and services that are being traded among different countries of the world. With the initiation of planning in India, or with the introduction of the 5-year plan, there was a fall in the export of those products which were previously exported from India, such as agriculture product, because our country has realized that foreign exchange reserve cannot be increased by the use of only agriculture product. So emphasis being made for the expansion of or to export more and more industrial products. We can see that shift is being noticed from the primary product towards the manufacturing products, and that is a positive change in the composition of trade. After attaining independence from colonial rule, the direction of trade of India has undergone a substantial change. During the colonial period, we have seen that 50% of the trade is between India and England. However, with the introduction of the 5-year plan, the exports of India were widened to other nations as well, such as Russia, Japan, USA and Australia, etc. Now we will discuss India's foreign trade problems. The first is mounting trade deficit. Earlier we have seen that the export has increased by 52 times and the import has increased by 72 times. We can see that the difference between the import is more and the export is, earlier we have seen that the import and the export both has increased, but the increase in the import is 72 times and the increase in the export is 52 times. So we can see that more import is going on and the less export is going on, because of which there is a trade deficit in the country. The second one is foreign exchange crisis. Increase in the trade deficit implies that the country faces a continuous shortage of the foreign exchange. Since the import is more and the export is less, so we can see that more and more foreign reserve is going out of the country. So our country start facing the foreign exchange crisis. The third one is climbing burden of debt. Just to solve the problem of the foreign exchange crisis, our country start borrowing the money from World Bank or International Monetary Fund, because of which what is happening? The debt is increasing in the country, and as a result India faced a high debt burden. Listen students, if you have not subscribed my channel, please subscribe the channel and don't forget to press the bell icon so that whenever I upload the new videos you get the notification. Let us discuss small scale industries. Small scale industries are labor intensive yet require little capital. Small scale industries can either be a manufacturing industries or service provider. Small scale industries comprising of small enterprises that manufacture goods or provide services with the help of small machines and a few workers and employees. Let us classify the small scale industries on the basis of MSME Act 2006. The MSME Act means Micro Small Medium Enterprises Development Act 2006. Let us see the classification of small scale industries on the basis of Micro Small Medium Enterprises Development Act 2006, which is commonly called MSME Act 2006. According to this act, small scale sector is being divided into micro, small and medium. In the case of the manufacturing sector, micro small sector is considered as that sector where the investment is less than 25 lakh. Small scale is that sector where the investment is from 25 lakh but less than 5 crore. And the medium manufacturing sector is that sector where the investment is 5 crore but is less than 10 crore. In the case of the service sector, the micro service sector is that sector where the investment is less than 10 lakh. Small scale service sector is that sector where the investment is from 10 lakh but is less than 2 crore. And the medium small scale sector is that sector where the investment is from 2 crores but less than 5 crore. As per the MSME Act 2006, the Micro, Small and Medium Enterprises Development Act 2006 is the first single comprehensive legislation which covers all the segments, that is micro, small and medium. The Act provides the framework for recognition of manufacturing and service enterprises and classify them into micro, small and medium enterprises on the basis of investment in plant and machinery or equipment, which we have seen earlier. Let us see the role of small scale industries in India, or we can say the role of MSME in India. The first one is output generation. Small scale sectors contribute 40% of the gross industrial value added in the economy. Listen, when we compare small scale sector with the large scale sector, we see that in the small scale sectors, less capital is being needed, and with the less capital, we get more output. This output is more than the large scale enterprises. The next one is multiple source of income. The small scale industries offer a wide range of non-agriculture activities to the rural household in the form of employment like khadi, handlooms, etc., along with the traditional activities of farming. The third one is employment opportunities. Small scale industries, being labor intensive unit, generates large employment opportunities. The rural and cottage industries are established to provide employment to traditional artisans and weaker sections of the society. The fourth point is promotes regional balance of growth. It is very easy to start small scale industries in any part of the country because locally available raw material is being needed and the labor intensive technology we have to opt. So it becomes very easy to remove regional imbalances from the country. The next point is entrepreneurship opportunities. Since it is very easy to set up small scale sectors as less capital is being needed, so more and more people is being motivated to invest money to start up small scale sectors which we need for the development of rural areas. The next point is low cost of production. See, small scale industries utilize the locally available resources, because of which the cost of production is very less and the consumer can get the product at a very low price. That is good for the consumers as well. The next point is promotes export. Small scale industries promote exports. See, it contributes approximately 50% of India's export. The next is optimum use of resources. Small scale sectors basically run by members of a family or local people. It facilitates quick and timely decisions. Thus, the resources and the opportunities can be optimally used. Let's recapitulate. The first is output generation. As compared to the large enterprises, more output can be generated with a minimum input. In the case of small scale sectors, employment opportunities. Since in the small scale sectors, labor intensive technique is being used, so in small scale sectors, more employment can be generated. In the rural areas, multiple income opportunities can be given to the people whose main occupation is farming. Promotes regional balanced growth. Listen, it is very easy to start up the small scale sectors. So with the small scale sectors, regional imbalances can be removed from the country. The next is entrepreneurship opportunities. Small scale sectors can easily be started. People can use their entrepreneurship and can become rich. The next is low cost of production. In the small scale sectors, mostly we use the local raw materials and the family members contribute in the production. So the cost of production is very low. Promote exports. 50% of the exports come from the small scale sectors. The next is optimum use of resources. Family members is contributing, local resources being used. So here the resources are used optimally. Let us discuss the next point, that is government assistance to small scale industries and small business units. Listen, the government provides significant packages to attract industrialists in the backward areas. Let us see the packages or the benefits which the government give so that the small scale sector should be established in the country. The first one is infrastructure. Every state government provides developed land in the rural or hilly areas at low rate to encourage setting up of enterprises in the backward areas. The next is finance. The government through various schemes provide Easy finance to the small scale sectors. The loan should be provided to the entrepreneurs without any collateral securities or at a very low rate of interest. Technology. Government has established various organizations which provide technological assistance to the small scale industries so that the productivity should be increased and the cost of production should come down. The next is training. The government has provided various policies under which individual running small scale industries are provided trainings. The next is procurement of raw materials, labor, etc. The government provides raw materials or other resources at a concessional rate or subsidized rate on priority basis. Next is tax exemptions. Government, as part of their support to small scale industries, exempted various taxes so that more and more people should be motivated and start up the small scale sectors. Let us see the problems faced by the small scale sectors. The problem faced by the small scale sectors vary from industry to industry or state to state. However, the common problem we will discuss right now. The first one is finance. Most of the enterprises are not able to maintain their credit rating or offer collateral security, and as a result cannot raise funds from government institutions or banks. The second problem was raw materials. Small scale industries depend largely on locally available raw materials. They have to compromise on quality of raw material available, and at times they have to pay higher prices to purchase quality raw material. The next problem is managerial skills. Small enterprises are usually run by an individual or with the support of family members who don't have the managerial skill. The next problem is marketing. Small enterprises are usually set up in remote areas due to lack of infrastructure, organized market, and direct contact with the consumers. Small scale enterprises are faced or forced to depend on middlemen for the sale of their product. The next problem is quality. Due to limited financial resources, the small scale enterprise cannot use technology to maintain standards of quality or invest in research to produce better quality products. The next problem is sickness. Because of limited finance, lack of skilled workers, outdated technology, etc., small business suffers losses and may become a sick unit over a period of time. The next problem is global competition. Because of the new economic reforms or the LPG reforms, it becomes very difficult for the small scale sector to survive in the local market. Let us recapitulate. The first is finance. Short of finance, they don't have the collateral security or credit rating is very low, because of which it becomes very difficult to get the finance. The second is raw material. They have to run on the locally available raw materials. They don't have the money, so they are not getting the high quality raw material. The next one is managerial skill. The small scale sector is being run or managed by the family members who don't have the managerial skills. The next is marketing. They don't know how to marketize the product. They don't have information about the consumer requirements, so they totally rely on the middleman. The next is quality. Since they are using the locally available raw materials, so the quality of the product is very low. The next problem is sickness. Since they are running at a short of finance and the quality of the raw material is very low, because of which the small scale sector start running at a loss and soon it turns to a sick unit. The next is global competition. By the introduction of the new economic reforms, it becomes completely impossible for the small scale sector to survive in the market. That's all we have in this video. Meet you soon with a new video. Till then, thanks for watching. God bless you all.